Hi, it's Lee, and welcome to the Tesla Economist. Alright, so we know how much the price drops are in China. As expected, the market would take this news negatively, and Tesla briefly dipped below $200. But then, with some news that earnings results were down outside of energy, it appears to have recovered as investors expect a more dovish action on rates from the Fed. Personally, I still feel positive about these price cuts. It shows that Tesla is going to sell all this additional production now. It would have been more concerning if they hadn't dropped prices and reduced production, in my opinion. I also think this recession will be much tougher for the competition. They've had to raise their prices due to rising costs and still make losses. If they start losing demand now too, then it gets really tough. I would say there's a possibility that more than half of these Chinese EV companies will be bankrupt by 2024. They don't have the capital to support their losses, especially if the losses get even worse. Not only that, next year is the last year of their EV subsidies too. Even BYD lose money on their NEVs without subsidies, and that includes their hybrids. Obviously, it's much worse for their BEVs. Making EVs at profit still appears to be incredibly tough, like Elon has said many times in the past. It looks like nothing has changed. I mean, not just EVs, but all cars. Look at how long the largest players in the automotive industry have been around, and how few new entrants there have been. It's a massive barrier to entry still. Still to this day, how Tesla entered it is a miracle, and to be so profitable too is just incredible. And we still haven't seen any competition. No one else can make a volume production EV at a profit, let alone anything close to a Tesla. I think a lot of people still don't realize how truly outstanding a job Tesla have actually done with manufacturing to get where they are today. But China is in bad shape, and it's not that surprising. I've been talking about it for a long time, telling everyone how modern monetary theory will end. But everyone just comments and says, I don't understand China, or I've never been there, although I've been twice. And the property bubble wasn't exactly subtle. Some of these people had even read Ray Dalio's book, The Changing World Order, and thought he made a compelling argument. And it was time to give in to China, as they'll be the new global superpower. It was just a matter of time. Just like what they said in the 80s about Japan. And Japan was poised to have the largest GDP in the world too, and instead it had the largest bubble in history, and is still recovering to this day. Although you might compare this more to the Soviet Union, and possibly the collapse of the CCP. Although now President Xi Jinping remains in power, who knows what might happen. I thought Peter Zions, analyst, made much more sense to me with his research on geopolitics, demographics and energy, and the next global superpower, according to him, was still pointing to the US. And now the US have just flexed their muscles, and instantly, once again, are by far the wealthiest nation on the planet. And China's economy looks like it's starting to crumble. They're facing this property bubble, and the banks are in trouble too. Besides, Ray Dalio is just following his own self-interest he has with China. This isn't good for Tesla, you might think. Over half of the world's Teslas are produced in China. The growth of the company over the last couple of years has been solely down to the progress we've seen with Tesla in China. Tesla have invested so much in China, and to lose that would destroy the company, you might think. Yes, China has been generating great cash flow for Tesla. But China was nothing more than a bonus for Tesla. It was relatively easy for them to set up there. They didn't even have to have any official joint venture like other Western companies have in the past. Chinese banks even lent Tesla the money to build their factories there. Tesla had to invest very little. They didn't even have to set up their own battery factories. The Chinese supplied those. Although I think that was kind of a joint venture in a sense. Sure, China got to gain and learn how to build EVs from Tesla, and look at the proliferation of EVs there have been as a result of spreading that human capital. Of course, some of them have attempted and succeeded to steal Tesla's intellectual property too, but that's one of the risks of setting up in China. All in all, it has been worth it for Tesla. The amount of profit these factories now produce tower over the initial capital investment. We know, however, that the future of Tesla never depended on China, or Tesla building out China further. Sure, there is more potential there, likely with a compact Tesla, but that's not where the big money is for the plans of this company. China may be the largest car market in the world, but they don't spend as much as the US. As for vehicles over $35,000 to $50,000, well, the US is by far the largest market in the world when it comes to that segment, and currently that is about the price point of a Tesla. Sure, there are a lot of people in China, but the GDP per capita is about 1/4 of the US. Tesla didn't have much opportunity in the way of growth before Shanghai. The best potential they had was building out Giga Nevada. It was only ever 1/3 finished, and perhaps could have reached around 100 gigawatt hours capacity of 2170 cells if it was finished, and possibly 1 million vehicles a year from Fremont, or maybe another factory also somewhere in the US. But when we saw the progress with LFP cells out of China, it meant that suddenly there was a faster, lower-cost battery available that would be suitable for EVs. In addition to that, due to Tesla's drivetrain, like their efficient motors, Tesla were actually able to achieve a decent range with these lower-cost batteries. And Tesla have been doubling down on them ever since, building a Model Y factory quickly after that. And despite being a smaller factory, it has about twice the output of the Model 3 factory due to massive manufacturing efficiencies in a short period of time, like the Gigapress. Tesla has been able to use this massive cash flow from China to aid their growth on other continents, along with researching their own low-cost cell that can be produced at very high speeds due to all their manufacturing and battery experience and knowledge that they have obtained over the years. Yes, just how China learned from the human capital of Tesla's engineers, Tesla gained experience from China's human capital when it came to manufacturing. The new factories are the main course, or entrees as Americans say. China was just the starter, or entree as everyone else says. Tesla Shanghai is not an accurate perception of Tesla's future. Berlin and Texas are the future moving forward, with even faster manufacturing processes and a higher value product. If you think the Model Y factory had a massive leap in manufacturing from the previous Model 3 factory, then imagine the new factories using front and rear castings and structural battery packs. We ain't seen nothing yet, and we're nearly there. Now we have Elon mentioning 1,000 gigawatt hours a year just in the US, multiple times on that earnings call. That's the real future, and will make Giga Shanghai profits look like BYD profits. And we'll work out what 1,000 gigawatt hours a year really means at some stage later. But Tesla's not even finished in China. So what? They dropped their prices slightly, because they could. And remember the operating leverage too. Tesla have just increased production around 30% in China. And before then, on average, there was perhaps about $7,000 OPEX per vehicle produced. Well, you know how much OPEX per vehicle these extra have? About $0. So although gross margins may come down slightly due to the additional ramp in China, operating margins may even increase. However, gross margins will increase too, as Tesla are producing more vehicles from the same factory space and are thus more efficient and reduce production costs. So how about we work out how much Tesla's earnings are going to drop due to these price cuts, which may only be temporary, of course, whilst we're in a recession. A better way to phrase this might be, if Tesla were able to sell all the cars without dropping prices, what would be the difference in earnings? As the earnings would have dropped more if Tesla weren't able to sell every vehicle they make. Also, just a reminder that Tesla had recently enough raised these prices, and the new prices are still higher than before that price rise. So the Model Y rear-wheel drive took a 9% drop. Now, people think that this price is actually 299,000 yuan now, and it's 288,000 after the subsidy. But the website takes a subsidy off later as a further discount. So I don't think that is true. When you include the subsidy too, we're at a total price reduction of 12.3%. Now, with a product with a demand as elastic as a Tesla, that's going to have quite an impact on demand. That's a huge drop. It's actually $5,000 to be clear. That's absolutely massive. And of course, it's such a good price, it crashed the website when people tried to order. Due to the subsidy, it means Tesla receive $3,800 less per Model Y rear-wheel drive sold in China. However, there was about $15,000 gross profit there already, so this would now reduce it to about $11,200. Although, like we said, they have likely reduced some costs too. But at 30% margin previously, this would now become 23% margin. So that is quite a significant reduction in gross margin. On top of that, we're also losing profits due to the US dollar being worth so much more, so we get less gross margin at a lower ASP, at a lower dollar, and that could continue to get worse. I think that the overall margin due to these line upgrades might be closer to 25% margin after these price drops, and the cost of those line upgrades were in the cost of goods sold for Q3, so that would have also affected margins somewhat last quarter. The thing is though, remember Tesla are exporting about half these vehicles from China, and the prices there have not dropped. So if we factor in only half of the vehicles, the average margin might have only dropped about 2.5%. Now, my ASP estimates were off by less than 1% last quarter, so if we use my ASP of US $43,000 for vehicles from China, and we lose 2.5% margin of that, with a quantity produced of 270,000 for the quarter, that comes to $250 million gross profit lost from these price drops, which, funnily enough, is exactly the number I'd been guessing before if they had dropped prices. Now, that's not nothing. It would likely come to about $220 million less in net profit for Q4, or $880 million a year. At a PE ratio of 50, that would be $44 billion of valuation lost. But Tesla has dropped a lot more than that, so I think this has been more than priced in. Remember, the exchange rate will be worse in Q4 than Q3 too, which will have a further effect. Tesla appear to still be planning on expanding in China too. There's an absolutely massive CATL factory likely to produce a further 100 gigawatt hours a year of cells, possibly for M3P cells. Maybe that means Tesla will deploy a lot more cells in energy. So Tesla can weather this recession and still make great profits. Tesla are prepared for this. They have these massive buffers. The competition are the ones in serious danger. Demand is slowing in the economy. Prices have risen with inflation and supply chain issues. And now Tesla is suddenly more affordable to a lot more people. But like I said, China was just a side project for Tesla to work on whilst they're building their real products, the gigafactories. Tesla built those factories, the lines are up, we're just waiting for the cell production to improve, and then we'll see what Tesla is truly capable of. Yes, we need a little bit of faith in Elon and Tesla right now, which is why we focus so much attention on the 4680 cells. It's why I've done as much as I can to learn about batteries, as it is the core product to the future success of this company. The 4680 is absolutely mind-blowing, and once sorted will take Tesla to all sorts of new highs, accompanied with robotaxis and FSD. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.